Hi there, this is Abhishek Bubna, and today we are going to discuss how to trade Nifty, how we have traded Nifty in the past. Looking at the monthly and the weekly charts, we'll know about the trends, and eventually we'll come to the current situation, and we'll discuss it shortly as well. Okay, so this is my monthly chart here, and we're going to start our analysis from 2007, which is this candle here. Okay, so I'm going to kind of draw vertical lines and mark territories of this fall, this rise, this fall, this rise, this fall, and this rise. Okay, just to quickly do that, this is how it looked like. Okay, so that is January 08 and it falls till January 09. So that is 1 year of fall. Okay, this started in January 11, so that is about 2 years of rise. This point here is January 12, so another 1 year of fall. Okay, this is February 15, so that is about 3 years of rise. 1 year of fall here till February 16, and then 3 years here till April 19. Okay, so we have 1 year of fall, 2 years of rise, 1 year of fall, 3 years of rise, 1 year of fall, and 3 years of rise. Okay, we'll also look in the weekly chart, and we'll discuss how we enter a trade, how we enter a trend, and obviously we'll come to the current situation and we can discuss it later. I'll also plot some indicators here such as MACD, RSI, and stochastic oscillator. So just to have a brief look at it, this is how my chart will look today, and this is how we are going to discuss about Nifty today. I'm going to split my screen into two parts. On the left hand side there'll be the monthly chart, and on the right hand side it'll be the weekly chart. Okay, so this is how it will look like. On my left hand side is my monthly chart, and on my right hand side is the weekly chart. Okay, so you can see the vertical boundaries, right? So that is 2007 till 2008, that 1 year of fall. Okay, if you've seen my Infosys video as well, we really give importance to any bearish or bullish divergence, especially in a long-term chart, especially in a long-term timeline, right? So when we see here, we have an M-shaped stochastic on the monthly chart on the left hand side. Okay, so I'm already looking to go short. I'm looking for an opportunity where I can take a position on the selling side, right? So when we come to the weekly chart, we see there is a bearish divergence in the MACD. There is a bearish divergence in the RSI, and after this tick down here, this small black candle, the market started falling, and we could take a short position as soon as this low is taken off. Okay, so you see bum and two candles, and you get enough profit, enough risk to reward ratio, and you can enjoy these profits. Okay, now obviously this goes down here, and then as the stochastic is oversold, there is a mere correction, and then you get an opportunity here again as there's an engulfing bear to go short again, right? So once you finish the swing, we can draw a channel here, and I'm just gonna quickly, we're talking about this trend, so we have a channel ready here. Okay, now what we see here is a bullish divergence in the weekly chart, and if you trade dailies, and if you want to trade dailies and a smaller timeline, you can use that to trade this correction as well. Okay, then once the price reaches the value zone, you can see dojis, and you can get a sell here and enjoy this profit here. Obviously, you book your positions near the channels, or whenever it's enough, whenever your risk reward ratio works for you. That is it. Okay, now at this point here somewhere where my cursor is, you see on the left hand side in the monthly chart there is a W shaped stochastic, right? So this is where I'm thinking the market may change its direction. Okay, so what happens here, the prices move sideways in a range till this point here, when I get a W shaped stochastic in the weekly chart as well. Okay, so what I'll do is I'll quickly draw a support line here so I know where the W-shaped stochastic is. And once I get this W-shaped stochastic, the probability of this breaking this range is higher. Okay, and once the prices go above the channel, above this moving average here, you can take a long position. Okay, and enjoy these profits. Alright, so I'm going to start looking at this trend now. Once you have taken a long position, you've probably booked your profits here because of the doji, because of the M-shaped stochastic here in the weekly chart, and the price is correct till the value zone, which is, the moving averages. Now you can re-enter here after confirmation of the support from the moving average, and you can enjoy the profit here on the long side since the trend is up. Once again, there's a bearish divergence in the MACD, okay, in the stochastic as well, and a little in the RSI as well. So you can expect a correction here again at the value zone. If your signals allow, you can enter again on the long side. Okay, bearish divergence again, it goes down, corrects, gives you an opportunity to go long here, and then finally it gives an opportunity to go long here near the bottom of the channel, and you can take this profit. Okay, now what happens here, there's a bearish divergence in the weekly chart, but there was one here as well, and it was mere a correction. But here there's a bearish divergence in the weekly chart, and if you look on the left hand side, there's a bearish divergence in the monthly chart as well. Okay, there's a doji here, and post that obviously we're looking to go short. Okay, so in November we're going to go short. There's an engulfing bear here in the monthly chart as well. So let's see what happens in the weekly chart. Obviously we're not gonna trade on a monthly chart. So there's a shooting star here with a black body on 11th of October, the week following 11th of October. It went up, a big white candle, engulfing bear on 8th of November. that is when you go short with a stop loss above the candle or on the midpoint, as it is a big black candle. So this half of this body becomes your resistance. Obviously it comes to the channel, goes back up again till the resistance, another engulfing bear, and it breaks the channel here on 10th of January. The week starting from 10th of January. Okay, so you could have taken a trade here till the channels, wait for the chance to break here with an engulfing bear, and trade on the downside here. Okay, now you get a swing up again. That is when you draw your channels. There is a doji here, spinning tops, and then you trade on the downside. Now let me get this channel on the weekly chart as well. Okay, so once you get the swing, you draw a channel and you trade on the short side every time you get an opportunity on the upper side of the channel. Spinning top, engulfing bear, down you go. Okay. Now you'll get these, small bullish divergences here and here. You could trade these, few hundred points, couple of hundred points, with the help of your daily chart, and that is possible as well, and that works for everyone as well. Okay. Finally, here on January 12th, there is a bullish divergence in the MACD. There's a W-shaped stochastic, and there is a W-shaped stochastic in the monthly chart as well. Okay, so what happens here is, after a tick up here, the divergence is active and you can go long here on the week starting 9th of January. Okay, so that is your support zone. This is your false breakout, and there you go. Okay, you can trade here once it breaks the channel with strength and volume, and you can wait. You can trade here as well. There's a daily bearish divergence probably here. You can trade this as well. But once you get a swing, once the channel is tested, you can draw a new uptrend channel as you get an engulfing bull here. Okay, something like this. Now you go long after this bull. An engulfing bull is made, and you trade till the channels are met. Okay, there's a bearish divergence in the MACD, M-shaped stochastic as well, and you get a correction. You can trade this engulfing bull again, trade this engulfing bear again. The daily charts will help you do it. Okay, and once you reach the bottom of the channel, you have false breakouts, a hammer, another hammer, and a big white candle here. Entering the channel again, you go long. Okay, this time what happens is the prices break the upper side of the channel. So what we're going to do is we're going to extend our channel or draw this extended channel. Once the prices break the channel comfortably, tests the channel and goes back up again, you've got the swing and you've got the channel. So every time the prices come near the value zone, the moving average, you go long. Okay, any bearish divergence such as this, you can trade this as per the daily chart. Okay, so finally, what happens when the trend exhausts? You have a bearish divergence in the stochastic here. You have a bearish divergence in MACD here. You have a shooting star with a black body. You have one small doji here. You have another doji here. And once the doji's low are taken off, you can go short. Once the channel is broken, you can go short. Right? What do we have in the monthly chart? A small bearish divergence here. An engulfing bear in the monthly chart with a small bearish divergence. Okay? So the engulfing bear completed here with this bar this week. In the next week, it opened higher, and then you have an engulfing bear in the weekly chart. It tested the low of the lower channel, gave you an engulfing bear, and went down. So you could go short here. Okay. Once you go short here, there's a high wave candle. You probably book your profits. There is a correction. Testing of lows. There's a bullish divergence. So you're definitely out of your short position now. Okay. We're still looking to go short because, this channel is taken off. It's broken, right? But we have to wait for the opportunity. So this bullish divergence takes the prices higher for its first swing here. Okay, then we have an M-shaped stochastic. So we're looking to go short. Okay, and then we have a big black candle here, re-entering the channel and re-entering the moving averages on the downside. So we are definitely looking to short here somewhere. With the help of daily charts, we enter the short position here. We draw the channels and the prices hit the bottom of the channel. Okay, once again, it's enough. Good risk to reward ratio. The prices have come down. There is a slight bullish divergence in the MACD. It's oversold. You book your profit, wait for another opportunity. Okay, the prices go back up, engulfing bear here, right? You enter again on the short side. Okay, you get a doji here, a big black candle at the bottom, which is a signal for reversal. Okay, the doji becomes a support. This becomes a false breakout. The midpoint of it becomes a reversal point, and when this big white candle is made, it pretty much suggests go long. Reversal is here. There's a bullish divergence in the stochastic, and there's a W-shaped stochastic here in the monthly chart. Okay, you could go long here somewhere. Okay, you can go long once it breaks the channel, tests it again, and then starts going up again. Okay, so you can go long somewhere here as well. You've got a confirmation in the monthly chart also after a big white candle is made in the monthly chart. It breaks the channels and a new uptrend has started. This one here. Okay, so once you enter here after the channel is broken, it is tested, then the trend resumes. You can go till here till you get a bearish divergence in the MACD, in the stochastic. Okay, and that is when you draw your channel, you get your first swing. It comes down after a shooting star, comes down falling till the bottom of the channel. You got a doji here, and you've got an engulfing bull from the same support point. Okay, you see there's a bullish divergence in the MACD as well. So you re-enter long here, enjoy the long run. So whenever you get a bearish divergence, try and book your profit, re-enter at the value zones till here when it breaks the channel on the upside. But what happens, it acts as a false breakout because the very next week there is an engulfing bear. Okay, there's an engulfing bear in the weekly chart with a probable bearish divergence in the monthly chart in the stochastics. Let me mark it for you. Okay, the prices fell. Once again, you enter here. This is the monthly value zone. You see here? This is the monthly value zone. You enter here. Keep entering till you get a bearish divergence in the monthly chart. Okay? And how so? In stochastic as well, and in the RSI as well. Okay? Engulfing bear, that is your short trade. That is a definite short trade. I mean, just considering 3 bearish divergences in the monthly chart, you would take this trade and you would expect a fall. Okay, so it falls through the channels. Once again, it re-enters the channel, so you can go long here. And eventually, after moving, range bound for like 2 months, it broke the range and went up here to test these highs, right? But can you see the highs are not, the prices are not closing above the highs comfortably? Right, there was a doji here, a shooting star with a slightly bigger body than I would have been happy with, and poor candles, right? What do we have in the monthly chart? We have a triple bearish divergence, and in the RSI as well. So if this month ends up like this, that is poor formation. Okay, so now you could get a divergence again and the prices can correct here, give you a divergence and then start the fall, or these divergences play a role. I'm not sure, but this fall is justified. This video is for educational purpose only, and hence we are, obviously I'm showing you what has happened in the past 12 years, and that is what we are discussing right now. Okay, what I'm going to do is just show you the first two, 2007, 2008, and the up move here, or I can show you the last two, this fall here and this rise here, on a daily chart. Okay, and we'll just briefly discuss so that you get an idea of how to enter on a daily chart as well. Okay, so what I'm going to do is I'm going to change my monthly chart into a daily chart. Okay, and I'm going to start my point here. Okay, whenever I'm looking to go short. It's pretty clear, right? I'm only looking for this and this. So, engulfing bear, big black candle, you get this fall. Okay, you can trade this as well. As I said, let me just zoom this out zoom in this chart and zoom out a little bit of dailies. Engulfing bear, there was a doji in the weekly chart. You're looking to go short, you can go short here, right? Then again, engulfing bear, when you were looking to go short, bottom of the channel, a doji, a bullish divergence, you can probably go long here. Okay. This point when we decided there was a weekly bullish divergence in MACD on the stochastic as well. Look at on the right hand side. Now on the left hand side in the daily chart, at the same point, we have a W-shaped stochastic, bullish divergence in it as well. Bullish divergence in this RSI and went up. You could trade this if you wanted. Right? You get this fall, you get this rise. Every bottom of the channel you get a bullish divergence. You can trade this uptrend. Here, when you're looking to go short at this channel, you've got a bearish divergence in the daily chart. And you've got a fall. Whenever it's enough, you can book your profits, right? Okay. So similarly, when the trend changed, you got a hammer here in the daily chart, another hammer here, another very long wick on the lower side, a bullish divergence in the daily chart, and you could have gone long here. Again, once the range is broken, easy peasy. Right? For this trade, you have a shooting star and a bearish divergence in the weekly chart. You could trade this as well with the help of the dailies. Look at this. You want to re-enter. The prices are going back in the channels. On the left hand side, when this engulfing bull was made, there was a bullish divergence here in the MACD, and there was a bullish divergence here in the daily chart as well. Prices went back in the channel. You could go long with a lot of profit. Okay. So this is how you're going to trade Nifty. This is how we look to trade Nifty. We look for a trend. We enter with the help of the weekly and dailies. And this is what gives you a very, very high risk to reward ratio. Very low risk, very high reward. This is what you want when you're trading. Okay. So even at the current scenario, right, we had a doji in the weekly chart. Let me just zoom in. Okay, and this support point where the prices were not going below was broken by a gap. That is huge, right? There was a bearish divergence here, a triple bearish divergence here, and a doji, and then finally opened lower with a gap. And for the past 3 days, it has been falling. Okay, there's nothing to miss here. Okay, open your Nifty chart, look into the monthly chart, look into the weekly chart, and see what you think about it. Whatever your strategy is, this is my strategy. This is how I do my analysis. I suggest you keep an eye on what I said, what you saw here, and use your own signals or own trading indicators that you use and see if they match as well. If they do, it's much better, right? All the best for Nifty, all the best for your trades. Do follow me on my social media sites, on Instagram, on Facebook. Do follow my YouTube channel. Just type in Abhishek Bubna. Check out the links on this video as well, on the description of this video as well. And thank you very much, and I'll see you for the next video.